We're going to work on problem 3.5 from our chapter 3, obviously, on adjusting entries. The problem is set up that you will be given an unadjusted trial balance. I have that information right here. It has an end of the year date or end of the period date of October 31st. They give us this information right here to make adjusting entries. They want you to make, the first thing to do is actually make those adjusting entries. So we'll concentrate on that first. I have set up over here T accounts for all of these with the beginning balances. You are not provided T accounts in your problem. I strongly suggest that you make T accounts, at least for the accounts that are going to end up having been used in these entries over here. Okay, but let's start out looking at it here. The first one says unexpired insurance at October 31st was $5,330. What they are telling us is that in the prepaid insurance account, we currently have $79.50, but our ending balance should be $53.30. It's the part that is not yet expired. So they're giving us an ending balance. We know our ending balance should be $53.30. Okay, so when we make an entry, how do we make this right here be true? Well, we've got to take some out of prepaid insurance to make that true. And it's going to take a credit, okay, and a credit for the difference between these two. So we should be able to say, you know, what is $79.50 minus $53.30? We need a credit of $26.20 to make that true, right? I mean, look at this now after the fact. If we had a debit balance and we credit that for $26.20, that leaves us with a debit balance of $53.30. Okay, so that's a starting point. Let's come over here and make a journal entry. That's going to be a credit to prepaid insurance. What is our debit? It's going to be insurance expense. Okay. Okay, so we'll debit insurance expense $26.20, and we will credit prepaid insurance $26.20. Okay. Since I've got the T accounts up and I already put the information into the prepaid insurance account, let's go ahead and post the insurance expense account as well so we can have the entire entry. I made additional accounts over here that you will not find on your trial balance. You need to be able to have these accounts as well to complete this problem. I think it mentions creating these accounts and the instructions to the problem, but anyway, we need insurance expense. So let's come over here and we can go ahead and put that debit into insurance expense. So we have our debit, we have our credit. We have posted both of these lines right here. Now we do not have account numbers, but I want to be able to keep track of when we have posted something or not. So I am going to just go ahead and put X's in here to show that we posted those two lines and we don't mess that up later. Okay, so we have finished the very first entry right here. The next one, it says supplies on hand at October 31st are $650. Okay, this is kind of like the one we just did in that they are giving us an ending balance. Our supplies we see are $21.70. We can find the account over here, $21.70. We need to create an ending balance in the amount of $650. Okay, so if we had $21.70 and we need $650, that means we have to reduce the supplies account. We would do that with a credit. So we can credit this, the difference between the two. So let's take $21.70 and subtract $650, and we can see we need to take $15.20 out of the supplies account to make $650 be the actual ending balance. Okay, so let's go ahead and make this entry. By the way, I'm dating these all October 31st. All adjusting entries are dated as of the last day of whatever period you're dealing with. Okay, so let's have let me go ahead and put the credit in place first because we talked about the credit. So we're going to credit supplies for $15.20. Okay, now what does our debit need to be? Well, hopefully you guessed supplies expense. If you did, you're right. Okay, so we're going to debit supplies expense for that same amount. And again, I'm going to be consistent and complete this one transaction, let's go ahead and put the supplies expense amount of $15.20 over here into that T account. And let me mark that we did both of these. Okay. Now, the third line, we're going to deal with depreciation for the year. Depreciation of the building for the year is $35.20. Okay, let's go ahead and date this on October 31st. We have depreciation expense. I'm going to abbreviate it just a little bit because we need to also put that this is building. We have a separate depreciation expense account for the building from the equipment account. Okay, so we are going to give it the exact amount here. It says $35.20 is the depreciation expense, so we don't have to calculate anything there. We're just going to use the $35.20. Now, the other half of that is we are going to put $35.20 into the accumulated depreciation account. I'm going to type it out first so you can see it all, and then I'm going to abbreviate it so it fits in the box. Accumulated depreciation building. Okay, that is the actual name of the account. Now, let me just abbreviate it here. And again, there are two accounts. There's one for equipment and one for the building, so make sure you get the right account. That's $35.20. Okay, that is done, and I'm not going to mess with posting that one. We went ahead and posted these because I wanted you to see the ending balance that we were working towards. We'll post these other ones when we're done. Okay, next one, 1031. This is depreciation of equipment for the year. It is going to look nearly identical, except instead of building, it's going to say equipment. So let's go ahead and put depreciation expense equipment. And we're going to use the amount they gave us of $3,060. Okay, and then we're going to go to the accumulated depreciation account, or use the accumulated depreciation account, and give it a credit of $30.60 as well. Okay, so we've done 4 of them. We're down to this one. Unearned rent at October 31st is $19.70. Okay, this is another one where they're giving us the ending balance. We have an unearned rent account. You can see it right here. Remember, unearned rent is a liability. We have been paid in advance for somebody else to rent something from us. Okay, they paid us in advance. They have now used up part of that. So at this point, only the $19.70 is still unearned. So that's an ending balance. We want our ending balance to be $19.70. Okay, how do we get there? We're going to have a debit of the difference. Okay, so $75.90 minus $19.70. We need a debit of $56.20 to make this $19.70 be the actual ending balance and unearned rent. If it is no longer unearned, what is it? It is earned. So we're going to move this from unearned rent into rent revenue. Okay, so let me come over here. Let's do 1031 again, and we're going to take it out of unearned rent with this debit, and we said the amount was $56.20, and we're going to put it into rent revenue for $56.20. And looks like I forgot to make a rent revenue account. Let me copy that real fast and make another account. Okay, so now we can finish that entry here, put the $56.20 over here, and we have completed this entry right here. So let's go ahead and just mark that we finished these. Okay, so we are done down to this point. The next one says we have accrued salaries and wages of $34.50. This is the amount of the entry. We are going to date it October 31st, and we are going to have a salary and wages expense. Okay, in the amount of whatever they said, $34.50. And since it is accrued, that means it is not being paid. There's no cash involved. This is going to be a salary and wages payable and I'm going to abbreviate that. Okay, and looks like I don't have that account either. Hold on. Okay, so I made salary and wages payable real fast here. We're going to go ahead and have the same credit of $34.50 into that account. Let's go ahead and put it into the T account as well, $34.50. Okay, let's mark that we did post these two lines, and we're ready to move on. There's only one more. Fees earned but unbilled on October 31st are $20,230. What they're saying is we have done this work, but we have not yet billed it. Okay, so it's not showing up in our accounts anywhere, and we need to put it there. So on 1031, we're going to put this into accounts receivable. Okay, if we haven't even billed it yet, we're obviously not getting the cash, so we're going to put it into accounts receivable for $20,230. And we're going to put it in fees earned because we earned it. Just because we didn't get the cash does not mean we didn't earn it. Okay, so we have all of our entries at this point, and we have several of them posted. Let's go back and post the ones that we had not already posted. So right here, we need to find the depreciation expense account for the building. It's right here. We're going to put $35.20 into that account, and I'm going to mark that I did that line. Then we're going to go to the accumulated depreciation for the building, and that is, where is that one? Right here. It gets a credit of $35.20. Okay, we got that line. We're going to find depreciation expense for the equipment right here, and we're going to put $3,060 into it because it says so right there. I'm going to mark that we did that line. Find the accumulated depreciation for the equipment, and it gets a credit of $3,060 from that line. Let's see, accounts receivable. Let's come down here. We need a credit, excuse me, not a credit, a debit of $20,230 into accounts receivable. Let me see if I can get that right. $20,230. Okay, and let me mark that I transferred that. And fees earned, right over here, it gets an additional credit of $20,230. And let me mark that we did that. So at this point, we've transferred all of the information from our journal into the T accounts. So we need to get ending balances in all of these accounts. Some of them only had one item. They just had the beginning balance, like cash, for instance. Cash does not get changed in your adjusting entries. So I can simply just put, where's my double border? Bottom double border. There we go. I'm just going to put that double border there showing that that is my ending balance. And I'm going to go through all of them with just a single number and indicate that they are done here with the double underscore. Okay. Utilities expense, that's the balance. Miscellaneous expense, that is the balance. Let's see, land, that hasn't changed, that's the balance. Equipment, likewise. Advertising hasn't changed, so I'll put that there. Building, salary and wages expense only has one, so that is still it. Repairs expense only has one item, that's it. Insurance, supplies, depreciation. Oh, now I see the problem. We didn't actually need a rent expense. I put rent expense when we should have had a rent revenue. This is not necessary here at all. Just pretend it's not there. Okay, salary and wages expense. I didn't put that over there. No, I sure didn't. Okay, hold on. We didn't post that one over there. $34.50 belongs in there, unless I'm duplicating something. Okay, we'll go with that. There's the salary and wages expense. It is done. Double underscore it. Rent revenue, that should be everything in there. Here's one with only one amount. It's done. Okay, so I think we've double underscored all of the items that just have one number. The double underscore, again, simply means it's a final number. Okay, that's all we're indicating there. Now let's deal with the ones that have two numbers on the same side, because those are going to be additions. Okay, let me just put a single line right here, bottom border, and we're going to add those up. Okay, so our balance there is 6280. Let me see, let's go ahead and do the double underscore here. Not the double, single. And let me put a line there. I'm just going to put my lines in place so I don't have to keep going back and forth on my thing here. Oh, I missed one there. Let's see. Okay, let's finish this up. Now that 62,860 is the ending amount here, I'm going to put a bottom double border on that one, and it's done. Okay, let's see. Are there any more with two on the same side? This one right here. All right. Okay, so we can do an auto sum on that, and just indicate that that is our final balance there. Fees earned is going to be $381,540. And okay, here's accumulated depreciation. We can just add those together because they're both debits, and we could show that that is a final number there. Okay, here's the other accumulated. We can auto sum those two numbers, indicate that that's the final number. Don't lose sight of what we're doing here. I'm just going through and simply coming up with the ending balances in all of these accounts. I forgot to put a double underscore on that one. Let me do that. And are we missing any that don't take a subtraction? Let's look. These are all good. Those are good. That's a subtraction. Subtraction. Okay. We're almost done. Okay, let's deal with the few that have that had a subtraction. This one was easy enough. We already did the math. We know that 2170 minus 1520 was 650. Over here, again, we've already done the math. We just need to indicate that was our final number. It was 7590 minus 5620 gives us that. Here, we've already done the math. That is our final number. Okay, I think we have all of the final numbers. Okay, so now that we have all the ending balances in our T accounts, we can do our adjusted trial balance. I had already made it and hid it here, so let me get it back. Let's see. What did I just do? I lost it. Give me just a second. There we go. I accidentally hid more instead of unhiding it. Here's the adjusted trial balance. It looks just like the unadjusted trial balance, except we're going to go in here and I'm going to add in these new accounts. As soon as I do that, I'll continue the recording. Give me just got my new and improved adjusted trial balance with the additional accounts in here. Let me state at the beginning, do not get caught up into the order of these accounts. All I have done is simply add in all those extra accounts in between the advertising right here and the miscellaneous, since miscellaneous should always be last. I did put the unearned rent under accounts payable since it is a liability. I put rent to revenue under fees earned, but I don't know that the order of expenses is ultimately important here. Hopefully in Cengage it'll be obvious the order that you should use. Okay, so don't stress over that. So all I'm going to do now is I'm going to drop in the balances according to these T accounts. Cash has a $4,700 debit balance. Accounts receivable is $62,860. Prepaid insurance is $53.30. Supplies are $650. Land $125,370. If I'm going too fast, hit the pause button every now and then as you're trying to copy this in. Building $306,210. Accumulated depreciation, make sure you're on the credit side for that. That is a credit balance, $156,720. Equipment, $150,670. Accumulated depreciation, again, go over to the credit balance. The equipment, where did it go? Okay, $112,180. Salary and wages payable, credit. That is $34.50. Accounts payable credit. Where did it go? Yeah, half the battle is going to be finding them all on here. Let's see. Building equipment. There it is. $13,370. Unearned rent is $19.70. Capital is $325,700. The drawing account should not have changed. It is $16,620. Fees earned has increased to $381,540. Rent revenue, we now have that in the amount of $56.20. Okay, and then we have a bunch of expenses, salary and wages expense, $34.50. Utilities expense, let's see, that didn't change. That is $47,330. Advertising did not change, $25,290. Repairs did not change, $19,150. Insurance expense, that's a $26.20 debit. Supplies, that's a $15.20 debit. Depreciation expense on the building, $35.20. Depreciation expense on the equipment, $3,060. And miscellaneous expense did not change. It is $68.60. Okay, so hopefully we have everything in the right place. Let me justify everything here. It's kind of looking cattywampus. Okay. Now, if we got everything in the right place, we should be able to auto sum each column or put it in your calculator. We're going to take the sum of all of these debits right here, and that's 78,210. Here, we're going to take the sum of the entire credit column. Okay, and that is a different number. Hold on here. I see what it is. Forgot to put our salary and wages expense in here. Hold on. Oh, I put it right there. Put the wrong number in there. Salary and wages expense. I have two numbers. What have I done? Oh my. Okay, I wish this is where we were in a live class so somebody could have put their hand up and went, hey, Miss Willis, you messed up. Okay, salary and wages expense had a beginning balance. This entry right here should be over here, so $34.50. This should not be at all. It was not necessary. So let's just combine these right here, and I'll fix the lines in just a second. So that is the salary expense. Let's see here. We don't need that double underscore. You get to listen to me talk about all this. No bottom border there. Not that. Wrong one again. No. I knew that was going to mess that up. Okay, let me put the bottom border back on that one. Okay, there's no need for you to listen to me talk about borders. I went ahead and fixed it right here. Salaries and wages expense. Let me put the updated amount in here. Okay, now it balances. And that was really just an example of real life in action. We make mistakes, and one thing I always tell my in-class students, so you guys might as well hear this as well, one thing that you will learn to appreciate by trying to do accounting in a manual manner like this is you will learn to appreciate your computer. I'm using Excel, but I'm using it in a manual way. If you had an accounting system you were using, that would never have happened, okay? So there are a lot of issues you run into because we're attempting to mimic a manual system that just are not realistic. I would not have accidentally had two salary and wages expense accounts, so at least that's very unlikely, okay? But anyway, at this point, we have the proper amount put in there. Everything is in balance. That's exactly what we wanted. Now, just kind of becoming an attraction. We are done with this problem. Okay, we have finished all this. If we were to go on, if we wanted to, we could use all this adjusted information here to do our financial statements, and they would be good numbers. We could take everything from here, okay, all those revenues and expenses. Let me just kind of highlight them. And that would be all we needed to make an income statement. We could take these two, that's our revenue, subtract all of our expenses, and we would have net income. We could join that net income to this information right here, and we would have a beginning capital. We would add the net income, subtract drawing, and we'd end up with an ending capital. That is a Chapter 4 thing that you will be learning real soon. Okay, and we would use the rest of this information right here, and we could create our balance sheet with that. Let's make it a nice little green. I like the green. Here we go. So we are prepared at this point to make good financial statements, good updated from adjusted number financial statements. Hopefully this was helpful and I didn't make it too confusing by having the accounts out of place or anything like that. If you need any help, please feel free to ask. Have a good day.